Happy 2023, everybody. We wish you a happy and healthy and prosperous upcoming year ahead. As always, as a service to you, our clients, we like to do a forecast into what the real estate market might hold as we look forward for the next 12 months. One of our personal coaches is the Brian Buffini Company. They provide great insight to real estate resources and coaching. What they do is they compile data from the National Association of Realtors at the end of the year, and then Brian Buffini makes his predictions for what the next year will hold. Out of the last 7 predictions he's made, he has been correct in all 7 years. Now, what we do in this video is we highlight the key notes from that hour-long podcast and we condense it down to 5 or 10 minutes, which makes it a lot easier for you to listen to. And hopefully you'll get some good takeaways from this and see that really the real estate market as we look into 2023 is a lot more positive than people have made it out to in the last quarter of 2022. As we get started here, there is the full real estate report that we can email to you at the end of this. There's a link in the post below. You can click that link for the full report, or you can subscribe to our emailing list and we can send that PDF report to you directly, as well as updates throughout the year on what the real estate market is doing. So as we get started here, the best way to summarize the 2022 real estate market is change. That's one word that really captures what we saw in the market last year. No one likes change in any area of life, especially when you're dealing with something as an emotional and a financial heavy investment as real estate. We saw at the beginning of the year, really hot market for sellers being able to list higher every single month than the month prior to that. And as we moved into the last half of the year, quarter 3 and quarter 4, we really saw that change due to hedging against inflation. We saw those rates increase and really slowed that increase in equity that homeowners had. Now, what we're gonna have to do as we move forward as homeowners, as real estate agents, is really work together to understand and align the expectations between a real estate agent and the client, whether that's a buyer or seller. And it's more important than ever to lay clearly those expectations with one another to maintain open communication. And it's important to have a skilled agent who can negotiate for you. They can set realistic expectations and walk you through the process with how fast the market shifts. As we've seen, it's important that you have someone that's going to support you and guide you through those changes. The number of pending contracts, I'm going to get into some data here. The number of pending contracts decreased to pre-pandemic levels, and that's mainly due to rates just being manipulated by the feds in order to hedge against inflation and help slow that down. So despite rates percentage-wise being at a 20-year high, that's not the issue, because historically they're still much lower than in the 1980s, 1990s, and even before that. But the issue and the reason why we had such a knee-jerk reaction and such negativity was because of the pace at which the rates rose, not actually where we're sitting right now with mortgage rates. One positive thing as we look at the United States as a whole is that our interest rates on a home can be fixed for 30 years. So that's a fixed rate. You know what your principal and interest payment will be for the next 30 years. Now, we're very fortunate because in some countries, those rates adjust monthly according to what the market is doing. So that could be really helpful if rates are decreasing. It's just very unstable when your rates are adjusting every single month like some other countries. So we're very fortunate. Even though rates have crept up, you still know if you purchase a house right now, what the principal and interest payment for the next 30 years will be. So that's reassuring as well. One thing to keep in mind, when we have low inflation, we have low mortgage rates, and it's directly related. So as inflation starts to creep up, rates start to creep up in order to slow that down. The good news is that we're past the peak of mortgage rates. So like I said, we've already seen those start to come back down. Rates should continue to creep back down as we move into next year. And the target is a 4% fixed rate for 30 years within the next 2 years. So rates should go from 6% down to 4% within the next 18 to 24 months. Historically, real estate has been the #1 hedge against inflation in the United States for the last 70 years. People like to feel safe by putting their money in the bank, which I'm advocating for. Have a little nest egg. But if you're putting all your savings just into a bank account and not investing that, there is a realized carrying cost to that. As inflation gets up to 8%, it's costing you to keep your money in a bank account. So real estate is one of the best vehicles to protect against inflation, put your money into an asset, and watch what that does over time. The other piece that we want to touch on is Inventory rates are still low. The real estate market that we're in is completely different than it was in 2007, 2008, and 2009. So many times you'll hear people say, oh, this is going to be a repeat of 2007, 2008 crash. But back in 2007, the inventory homes, the homes on market available for someone to purchase, were 4 times higher than they are right now. So that's reassuring that there's still a housing shortage. People are still in dire need of finding affordable housing, finding housing in general, and there is still a shortage. Homeowners are positioned very well despite the equity slow in the market. Home values are back to where they were as of January 1st, 2023. The value across the United States in homes is back to where it was in March of 2022. So a lot of owners still have equity in their home. No one's really upside down in their home, especially if you've bought in the last couple of years, you still have a lot of equity. Home prices nationwide went up 10% in 2022, and they're expected to increase only 1% as we move into 2023. And lastly, 5% increase is expected into 2024. So we'll see that peak of 10% in 2022, all the way down to 1% appreciation rate in 23, and then back up to 5% appreciation or equity growth in 2024. So right now, if you buy this year in 23, you should expect to see some nice returns the following year in 2024. So current homeowners are positioned very well, but so are buyers. Despite what you may hear with rates, buyers are still positioned well for the following reasons. They're in a position where they can actually negotiate on homes. They don't have all the competition in the market where you have to make a decision right now today to spend 40 grand over the list price of the home, waive your ability to have an inspection, waive your ability to have an appraisal. Right now, buyers are positioned well that they can negotiate. They have more choices. They have more time to think about it. They can negotiate getting closing costs or rate buy downs, which means that it's less cash to come to the closing with. We're seeing $20,000, $30,000 seller concessions in order to make a deal work, which means that the buyer is coming to the table with very little cash out of hand, and they have more selection and more time and less pressure when they want to buy a home. As inflation has creeped up, rents are going to start creeping up as well. So you're going to see rent rates increase by up to 10% over the next 18 to 24 months. So right now, if you are potentially thinking about buying a home, it's going to cost you more to rent a home over the next few years than it will to take advantage of buying a home right now. So renters who are undecided or discouraged from buying should take advantage right now of the market with the more selections and everything that I mentioned in order to secure a home before the opportunity is gone and rates creep back down and it becomes chaos again in the buyer market. We'll do a quick recap here. 2 last points I want to leave you with. The first one is now more than ever in the past 5 years, is it important and vital to you as a consumer, as a home buyer or home seller or home investor, to have a real estate agent who has experience, they can negotiate, they have a skill set, and they know the market that you're in. The second thing is we will be sending out this market forecast report, as I mentioned in the beginning of this video, to all of our clients. It's a full in-depth report with statistics and charts that you can read and learn more about. And any questions you have about the value of your home, or if you're a home buyer, what you could potentially afford, reach out to us. We'd be happy to guide you and provide you assistance along your journey in your real estate. And we will share a full link to the Brian Buffini podcast below for anyone wanting to listen to the full hour of his predictions. Thank you guys so much for your trust, for your business all year in 2022, and for all of our upcoming relationships that we get to build with you this year in 2023. Cheers.